Welcome to a journey through the world of finance and wealth creation. What if you could turn small actions into lasting financial freedom? By the end, you'll know how to build consistent streams of income. The first step in any money-making journey is clarity. You cannot grow what you cannot measure, so understanding your income and expenses is the foundation of progress. Many people underestimate the power of tracking every transaction. Awareness alone can reveal hidden leaks that, when fixed, create room for intentional growth. Imagine finding an extra $50 a week just by noticing unnecessary charges. Over a year, that is over $2,000 you could invest instead of waste. Budgeting is not about restriction. It is about control. A budget lets you tell your money where to go rather than wondering where it went. Start with three main categories: needs, wants, and growth. Needs keep life running, wants bring joy, and growth funds your future wealth. Allocate money to each category intentionally. Even if your income is small, consistency beats sporadic bursts of effort. Compounding wealth works best when you start early. A small, regular investment today can grow to surprising amounts over decades. For example, investing $200 monthly with modest returns can become hundreds of thousands over working lifetime. The key is patience. Wealth does not sprint. It walks steadily forward when you remain disciplined. Many abandon their financial goals because progress feels slow, but slow is fast when measured over years, not weeks. A powerful mindset shift is to see money as a tool, not a reward. When money works for you, it multiplies without extra labor. This requires separating emotion from decisions. Chasing excitement leads to risk, but pursuing strategy leads to results. Every choice has opportunity cost. Choosing a purchase today may mean sacrificing investment growth tomorrow. The most successful investors think long-term. They accept small sacrifices now for greater rewards later. This delayed gratification principle is a hallmark of wealth building and applies in business, investing, and personal finance. To strengthen this skill, set short-term challenges. Go 30 days without buying something non-essential and invest that money instead. Seeing even a small account balance grow triggers motivation, which fuels further action. Your environment matters too. Surround yourself with people who value growth, not only consumption. Conversations shape beliefs, and beliefs shape actions. Being around financially wise individuals accelerates your own discipline. In finance, knowledge compounds like money. Learning one concept opens doors to understand the next more deeply. Commit to ongoing education, books, courses, or simply asking better questions about how money works. Understand that wealth is not just income. It is the assets you own, the debts you owe, and how the difference grows over time. Net worth is the true scoreboard in personal finance. Growing it steadily is more important than impressing others with spending. Lifestyle inflation is a common trap. As income grows, expenses rise to match, leaving little for real wealth building. Avoid this by setting a fixed lifestyle baseline and directing extra earnings toward investments or debt reduction. This discipline is what separates those who look rich from those who are truly financially free. Financial freedom means choices. You decide how to spend your time, not your bills or employer. Reaching that point requires intentional planning, steady action, and a refusal to let short-term desires derail your long-term goals. By building habits now, you create a system where your money works harder than you do. Multiple income streams are one of the strongest shields against financial instability. Relying on a single paycheck is a fragile strategy. Side hustles, small investments, or passive revenue sources can provide safety and opportunity when the unexpected happens. The internet has removed many barriers to earning. Skills, creativity, and persistence can turn into income without massive upfront capital. Freelancing platforms, digital products, or content creation are modern tools for building additional cash flow. Even small side earnings matter. $50 a week from a hobby can cover utilities or be invested for long-term growth. When building a side stream, Focus on skills that grow in value over time, not those that require endless trading of hours for dollars. Time leverage is key. Products, assets, and systems that can be used or sold repeatedly create exponential potential. Digital products like courses or templates can be made once and sold many times without significant extra work. Real estate is another path for passive income, though it requires more capital and knowledge to start effectively. Even a small rental property can produce steady returns, appreciation, and tax advantages over the years. Investing in stocks or index funds offers accessibility and growth, especially with a consistent, long-term approach. Dollar cost averaging, investing the same amount regularly, reduces emotional decisions and market timing errors. Reinvesting dividends accelerates compounding. Each payout buys more shares, which then produce more dividends. Long-term investors view downturns as discounts, not disasters. Markets recover over time, rewarding patience. Building wealth also requires risk management. Never invest money you cannot afford to leave untouched for years. Diversifying across industries and asset types reduces vulnerability to single events or market swings. Keep some cash reserves. Emergencies happen, and without a cushion, you may be forced to sell investments at the worst time. Experts recommend 3 to 6 months of essential expenses in an accessible emergency fund. This fund is not for vacations or luxury purchases. It is a shield against debt in times of crisis. Speaking of debt, high-interest debt is the enemy of wealth. It drains resources and slows progress. Pay off debt strategically, starting with the highest interest rates to save the most money over time. Celebrate each milestone in debt repayment. Progress fuels the motivation to keep going. Avoid using debt for depreciating assets like cars or unnecessary electronics unless absolutely necessary. Use credit strategically to build a strong credit score, which lowers the cost of borrowing when it is truly needed. Pay balances in full each month to avoid paying interest and to strengthen your financial reputation. Remember that a high income with bad spending habits will still lead to financial stress. Wealth is built more by what you keep than by what you earn. Saving and investing beat reckless spending every time. Automating transfers to savings or investment accounts removes the temptation to skip contributions. Treat investments as a bill you must pay yourself every month, not an optional leftover. Over time, this discipline creates a foundation for lasting financial security and freedom. Mindset plays a larger role in financial success than most people realize. Beliefs about money influence every decision you make. If you see wealth as unattainable, you will unconsciously act in ways that prevent you from achieving it. Conversely, if you believe opportunities exist, your mind will seek and recognize them when they appear. Gratitude for what you have fosters responsible management of what you gain, avoiding reckless spending. Setting clear financial goals gives you a destination. Without them, money drifts aimlessly, often disappearing. Break large goals into smaller milestones. Achieving them builds confidence and keeps you motivated. Write your goals down and review them often. A visible reminder keeps your focus sharp. Visualization can be a powerful motivator. Picture yourself living debt-free or enjoying the benefits of passive income. Your habits shape your financial destiny. Small daily actions build into large results over years. Track progress monthly. Seeing numbers improve reinforces the behavior that caused it. Limit exposure to negative influences like constant consumer advertising or social media comparison. Comparing yourself to others' lifestyles often leads to spending beyond your means. Remember that many apparent luxuries online are funded by debt, not actual wealth. Seek mentors who have achieved what you aspire to. Learning from their mistakes can save you years. Read stories of ordinary people who achieved financial independence. Their paths often start with small, simple steps. Adopt the mindset that learning about money is a lifelong process. The economy evolves, and so should you. Economic downturns test your resilience. Those prepared financially view them as opportunities to invest. Keep emotion in check when markets drop. Fear-based selling often locks in losses that recovery could have erased. Be open to adjusting strategies. Flexibility allows you to adapt to changing circumstances without abandoning your goals. Use both active and passive income strategies to balance stability and growth. Active income comes from work, while passive income comes from assets you have built or invested in. Your ultimate aim is to have passive income exceed your living expenses. At that point, you achieve financial freedom and the ability to choose how to spend your time. But freedom is not the end. It is a platform to pursue passions, help others, or explore new ventures. Give your money a mission. Without a purpose, even large sums can be squandered. Some people choose philanthropy, others focus on family security or adventurous experiences. Align your financial actions with your values to find deeper satisfaction in wealth building. Wealth is not only about accumulation, it is also about protection and preservation. Insurance can safeguard assets and income from unexpected loss or damage. Protect your future as carefully as you grow it to avoid setbacks that erase years of progress. Estate planning ensures your wealth benefits those you choose after you are gone. It is a vital yet often overlooked step. A simple will, beneficiary designations, and clear instructions can prevent disputes and preserve your legacy. If your assets are significant, consider a trust to manage distribution more effectively and privately. Financial literacy is a gift that multiplies when shared. Teaching family or friends empowers them for life. Involving children in age-appropriate money discussions builds their skills early, avoiding future mistakes. Encourage saving part of any money they receive. This creates habits that will serve them in adulthood. Share the principles of delayed gratification, showing how patience grows rewards over time. Led by example. Children copy behaviors far more than they follow verbal advice. Beyond family, you can influence your community by supporting financial education programs. A financially informed society is stronger, more resilient, and better able to create opportunities for all. Keep refining your own knowledge. New tools, platforms, and strategies emerge constantly in the financial world. Cryptocurrency, for example, has introduced new possibilities and risks that require careful study. Approach emerging trends with caution, balancing curiosity with sound risk management. Never invest in something you do not fully understand, no matter how exciting it seems. Scams often disguise themselves as urgent, high-return opportunities. Slow decisions are safer. Trust but verify every source of advice, even from friends or well-known personalities. Avoid emotional decision-making. Excitement and fear are both poor advisors in financial matters. Base choices on data, long-term strategy, and clear alignment with your goals. Revisit your financial plan annually to ensure it reflects your current priorities and realities. Life changes, and your plan should evolve to stay effective and relevant. Marriage, children, relocation, or career shifts all have financial implications worth considering in advance. Prepare for the unexpected by building flexibility into your financial strategy. Flexibility prevents panic when circumstances shift, allowing you to adjust without losing momentum. Consider the tax impact of your choices. Taxes can reduce returns if not planned for strategically. Legal tax planning is about using available rules to keep more of your earnings working for you. Retirement accounts, deductions, and credits are tools to increase efficiency in wealth building. Even small annual tax savings compound into large amounts over decades. Work with a qualified professional if your situation is complex, or if you want to ensure maximum efficiency. However, remain informed so you can evaluate and guide professional advice wisely. Delegating without understanding can lead to costly mistakes and missed opportunities. Retirement planning should start as early as possible. The more time your investments have to grow, the less you need to contribute monthly. Determine the lifestyle you want in retirement and estimate the income required to sustain it comfortably. Use retirement calculators to visualize the savings needed, then work backward to set yearly and monthly targets. Consider inflation in your calculations, as the value of money decreases over time. Diversify retirement savings into various assets to balance risk and return over decades. Employer-sponsored retirement plans often include matching contributions. This is free money you should always take advantage of. Individual retirement accounts can supplement employer plans and offer valuable tax advantages. Review your asset allocation periodically, shifting toward more conservative investments as retirement nears. Avoid withdrawing from retirement accounts early, as penalties and lost growth can be significant. The goal is to create a retirement income stream that supports your lifestyle without exhausting your savings. Annuities can provide predictable payments, but they require careful evaluation of fees and terms. Rental income from real estate can be a reliable source during retirement if managed well. Dividends from well-chosen stocks can provide cash flow while preserving principal. Keep some flexibility in your plan to adjust withdrawals based on market performance. A safe withdrawal rate protects your savings from depletion while meeting your needs. Financial independence before traditional retirement age allows you to choose work for fulfillment, not necessity. Achieving this requires aggressive saving, disciplined investing, and minimizing debt early. The earlier you start, the greater your ability to harness compounding for faster independence. Consider geographic arbitrage, living in lower-cost areas to stretch your money further. Lower living expenses can drastically reduce the income needed for a comfortable lifestyle. Healthcare costs should be part of your financial planning, especially as you age. Insurance and health savings accounts can help cover these costs efficiently. Unexpected medical bills can derail a plan if not accounted for in advance. Long-term care insurance may be worth considering to protect assets from large future expenses. Balancing present enjoyment with future security is the art of personal finance. Denying all pleasures can lead to burnout, but overindulgence threatens long-term goals. Create a spending plan that includes room for fun while keeping savings on track. Rewarding yourself occasionally reinforces positive financial habits without eroding progress. Experiences often provide more lasting satisfaction than material purchases. Memories and relationships built through experiences can be more valuable than possessions. Generosity can also be part of a healthy financial plan. Giving to causes you care about brings purpose to your wealth. Charitable contributions can be structured to maximize both impact and tax benefits. Donor-advised funds allow you to contribute now, receive immediate tax benefits, and distribute funds over time. Giving does not always mean money. It can also mean sharing skills, time, or resources with those in need. A spirit of generosity can strengthen relationships and networks, which can in turn open new opportunities. Avoid the trap of thinking you must be wealthy to give. Even small contributions can have a large impact. On the path to financial success, maintaining balance between self-interest and helping others is key. Money amplifies who you are. Building good values now ensures wealth is used positively. Another vital element is resilience. Setbacks are inevitable, but persistence determines long-term outcomes. Reframe failures as learning experiences that refine your strategies and sharpen your discipline. Many self-made millionaires credit their wealth not to perfection, but to consistent recovery from mistakes. Tracking key financial metrics helps you identify patterns and adjust before problems grow. Your savings rate, investment returns, and debt-to-income ratio are valuable indicators of health. Celebrate progress toward goals, no matter how small. It builds the momentum to continue. Avoid lifestyle envy by focusing on your own benchmarks rather than others' achievements. Remind yourself that financial success is a marathon, not a sprint. Stay informed about changes in economic trends, interest rates, and market cycles. Use this knowledge to anticipate shifts and adjust your strategies proactively. Be cautious with speculation. Quick profits can tempt you, but they often carry high risks. Build your portfolio primarily on assets with proven stability and potential for steady growth. Keep learning from credible sources and filtering out noise from unproven opinions. Discipline in information consumption is as important as discipline in spending. Surround yourself with accountability partners who share your commitment to financial growth. Joint goals and mutual encouragement make sticking to a plan easier. Share successes and lessons with your network to strengthen trust and inspire others. In the end, your relationship with money shapes your quality of life far beyond numbers in an account. Cultivate respect for every dollar, knowing it represents the time and energy you invested to earn it. This perspective fosters better decision-making and greater satisfaction in both spending and saving. True wealth is a mix of financial security, personal fulfillment, and the freedom to choose your path. Subscribe so you can learn how to change your mindset and your money to build wealth.